From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Last week, neither of us started. Today, we both went to start. All right, all the stuff you need to know about the day in business and markets. Welcome to the COB. I'm Juliette Sarli.
And I'm sometimes Danny Akuye. Okay, let's check in and see how our local market has traded today because, gosh, Jules, didn't we have a great lead from Wall Street?
We did indeed, and a really good day on the overall market. We're up 1.3% on the CBO 200. The ASX 200 also having a good session. Yeah, so 7,102 points, which is a very solid session indeed.
Yeah, up almost actually 100 points. So we'll definitely take that because the Aussie market sometimes has not been following the Wall Street lead. But let's have a quick check-in in terms of our three themes for today. And of course, you have to say the first one, Jules.
Yeah.
This is your favourite.
Well, I just thought it was good. I know you said it happened 9 months ago, but the inflation fever has broken, according to a key US economist, on the back of that cooler than anticipated October CPI in the US. We know that it was fuel costs falling, offsetting some of those rental pressures, but it really does see potentially when you look at what the bond yields, have done, that investors are really pricing in that the Fed is done now with rate hikes.
Yeah, it certainly looks that way. I'd hazard a guess that there was lots of algos going full speed and also some short covering going on, and the bond vigilantes getting their fingernails singed off. But nevertheless, we will take that. And at home, we had the wages data. Look, in all honesty, it came in pretty much as expected. Those minimum wage price increases coming through in that wages data. But it does look to some commentators, speaking to Barrenjoey, that they feel that this is probably the peak in terms of the wage price index here in Australia.
Yeah, I think it was interesting too. I was drilling into some of the data with Stephen Miller earlier from GSFM. It wasn't just what we were expecting with some of those minimum wages, those aged care workers, but also individuals asking for more money, I guess, in this light of higher interest rate environment. You've got higher mortgage payments, and that was sort of a bit of an anomaly too. So what does that all mean for the RBA? And you've been focusing on some lithium M&A.
Well, I just thought it was quite interesting that we've seen the price or the share prices really bounce higher today. I was doing the read about Allkem, which is doing that big M&A, and it's going to be the third largest lithium producer in the world after Albemarle and the big Argentinian, I think it is, supplier. I think at the end of the day, we're going to see a lot more activity in this space. We've obviously had the Liontown acquisition from Albemarle. Gina put a stop to that, but nevertheless, they were really bombed out, the lithium stocks, and it doesn't take much to get them moving. And of course, why they were moving today was because all the renewable energy space was also running off the back of those lower perception of lower yields, lower interest rates, because it's a very interest rate sensitive sector.
Well, let's speak about interest rate sensitive sectors and have a look at the REITs. They were the best performing sector, up by 4.9% on the ASX 200. But we're also looking at lithium.
Yeah, let's have a look at lithium. And as we can see, green across the screen on that one, but they were heavily sold off. And let's have a look at the REITs because, as Jules said, very, very strong today, particularly at Charter Hall, up by 9.7%. And that is pretty much replicating what you saw over in the United States as well.
Yeah, having a look at the tech space as well. WiseTech Global, they're up 5.5%. Block up by 4.7%. In fact, 10 of the 11 sectors higher today. Also a big boost coming through from metals and mining.
Yeah, that iron ore price continuing to move higher, and it looks like that China data that came out a bit earlier.
25.14.
Yeah,
wow.
Yeah. Well, the iron ore price, it was up another 2% today, so it must be up around it was past $127 a tonne. So for the likes of Fortescue, they really do benefit. So very, very strong across that sector. But let's have a quick look at some of the corporate stories because Flight Centre had their AGM today, and total first quarter transaction value is up by 20%. And the company, just noting margin improvements, led to a strong first quarter profit uplift. And they've given guidance for full year 24, pre-tax profits of around 270 to 310 million, a range with improving airline capacity. But market turning its nose down, Flight Centre off by 3.5%.
You can't please everyone all the time. All right, to Nufarm, that was a front runner today. The MD and CEO Greg Hunt saying global conditions were more challenging in full year 23. Underlying earnings also fell down 2% on the year to $438 million, but it was the guidance for Nufarm that saw its shares up 8%.
Okay, and stock of the day was a Flight Centre with Andrew Violent and from DP Wealth Advisory and Sean Cartwright from Anadara Asset Management.
Always a little bit torn on this one because the CEOs are next to Woomba Boys, so obviously it sort of goes up the rankings purely on that basis alone. Graham Turner, the former vet, before he started running those buses around Europe and London, of course. But it's obviously hostage to what occurred with the pandemic, and it's bouncing back. But as you also pointed out at the AGM today, they were still talking about capacity constraints. In particular from Australia back to Europe through the Middle East. So that's certainly a bit of a concern, and whether that's going to sort of abate. And obviously, again, coming back to your comments before relating to travel and certainly, if I can put it so delicately, the more mature people are able to afford to travel, but with 12 or 13 interest rate rises, that certainly puts that discretionary spend out of most people's sights as such. So I guess we've always been pretty cautious on these sort of travel-like companies. Corporate travel's another one that we've been pretty cautious on as well. I note consensus is about $24. They're trading at around 19 at the moment, but certainly I wouldn't be viewing these as cheap. You're being asked to pay a PE of around 20 times earnings. So even though consensus looks okay, it's probably not the right sort of sector relating to what's going on with consumer discretionary spending. Note the price is under a bit of pressure today because, as you said, they basically just met midway of consensus. So on balance, Andrew, I think it is a hold.
In their presentation today, the wording was, I think they've played around with some wording and they were talking about improving margins. I don't know that their margins have improved. I think that the average sale has increased significantly and their margins are relatively consistent. I think that as capacity comes in, we've all heard what happened, the blow up with Qantas and Qatar and the government apparently blocking additional routes. Eventually, there will be additional capacity added to our network, and that will bring a reduction in travel costs. I travel regularly, and it is absurd at the moment the amount of money it costs to fly out of this country and come back, and there just aren't any seats. You have to plan ahead, otherwise you can miss out. So I'm a hold at best. I actually think that they'll probably struggle, and I see a little bit of downside here. So I'm certainly not a buy. I'd be a hold to maybe even a sell or lightening of your position if you've already got some.
All right, welcome to the COB, Kyle Rodder from Capitalcom. Kyle, a lot to talk about with the US inflation, our own wage price index and the China data, but I wanted to start with your thoughts on that inflation data and particularly the rally in bonds we saw, which was, I think, the most significant since March.
Yeah, it was an absolutely massive move. I mean, 20 basis points or 20 points basically right across the 2 to the 10 years and all but pricing out any further rate hikes from the Fed, which, seems to be a fairly big reaction to what was a fairly modest downside surprise in the figure. Of course, 4% is a great number. It's the lowest level that we've had in terms of a core inflation rate in the United States since August 2021. But by the same token, it's still twice the Fed's target of 2%, albeit, of course, it's the CPI figures isn't the Fed's chosen inflation gauge when it comes to sort of tracking, of course, where it is on its way to target. So nevertheless, it was a huge move. I'd be interested to see, of course, if it does follow through over the next few days because, we saw the Aussie dollar up by sort of 2% last night. We've got the Nasdaq up by more than 2% as well, and a very broad-based rally across the Asian region too. So, I mean, it stands to reason that we get this kind of rally, potentially even carrying through into the end of the year. It's that kind of mechanical thing that happens when bond yields fall, and maybe a little bit of momentum starts to catch us going into Christmas as we price out that final hike of the cycle. But nevertheless, again, it's a very enthusiastic response to what was a good number, but one that certainly doesn't put the nail in the coffin of rate hikes, and certainly doesn't suggest that we'll be getting the sort of anywhere between 50 to 100 basis points of cuts that are currently being implied by the futures markets in the United States by the end of 2024.
Kyle, China, some data out of there that apparently was a little bit better than expected. How did you read it?
I thought it was better than expected. I mean, it was probably a mixed print overall. I mean, the property investment side of things is still very concerning, was lower than expected, and continues to show some of the malaise that is affecting that part of the economy. These numbers aren't updated for today, but you get the sense of sort of where we are very vaguely in terms of the cycle at the moment, where there is the hopes that back in August we did see a trough in economic activity and we're slowly coming out of it. The big number today was those retail sales figures, 7.9%. Expectations were for 7%, and it was a jump from 5% or 5 point something percent a month earlier, which suggests that maybe the animal spirits are starting to stir just a little bit amongst Chinese households. The addition to that too is, of course, this afternoon or perhaps earlier today, we had the PBOC injecting effectively the largest amount of liquidity into the financial system in the past seven years or so, of course, to try and support the fiscal stimulus measures in which the government is trying to embark upon, and obviously sort of basically deficit spend the way into, I suppose, towards the country's 5% growth target there. So, I mean, overall, it was a good figure. Whether it'll sort of, again, stoke a sustained rebound in Chinese equities, I'm a little bit skeptical, because I don't think we're just dealing with cyclical issues here. But nevertheless, the proof is in the pudding. The moves last night in rates in the United States, combined with some okay China data and some of those actions from the PBOC supporting the broader region today.
Kyle, we were looking at the wage price index, and of course some of that was very much factored in with the increase in some of those aged care workers' salaries. But I was talking to one analyst who was saying some of the anomalies could have been from individual paychecks, people sort of batting in for higher costs. I mean, you've changed jobs in the last survey. Tell us your thoughts on the wage price index.
Oh yeah, we're booming. We're absolutely booming, Julia. It's party time. No, it's. From the forecasts that I've seen, this is basically the best of it when it comes to this cycle of wage prices or wage growth. So, I mean, I think the market reaction here was fairly mooted on the basis that, okay, we're at 4% now. It's the highest level of wage growth we've seen in 14 years or so. And, that quarterly number, as I understand it too, was sort of a record jump. But it's going to sort of subside here a little bit. And this is probably, with a tight labour market, a labour market that's starting to loosen, with the support of those sort of of those institutional factors as well, of just the uplift from the minimum wage decision. It's not going to necessarily get all that much stronger here in terms of wage growth for Australians from here on in. So it would seem that the inflationary pressures of wages is going to be fairly modest from here on in. It's probably not going to require, at least on the basis of this number alone, any sort of further hawkishness from the RBA. And indeed, I mean, if you sort of spoke to any employer or anyone, especially I suppose in the fairly socially mobile demographic that I tend to be in, and obviously fairly mobile in terms of labour market activity demographic that I seem to be in, a lot of people got a lot of decent pay rises over the last few years. But as I understand it, that's certainly stopped. There are wage freezes everywhere, and people are feeling perhaps not so secure in their jobs to start sort of bartering with their employees anymore. So it would seem that this is the peak in the cycle for wages. That's certainly what economists are expecting. And again, I think that's why the markets were, fairly shrugged off more or less the wage data that we got today.
Kyle, is that a sneaky tash I can see growing?
No, it's not. It's funny, since the age of about 11 is the only place I could grow facial hair, and at that age I thought I was in for a full beard by 15 or 16, but it never actually grew. So this is only about 24 hours of growth, but it's as good as it's going to get, because I've tried to do it, and again, I look like rather than a market analyst, I should be working at the drive-through at McDonald's as a teenager at the end of their sort of high school work day, rather than what
Fair
I'm doing.
enough. So no Movember for you then. Kyle, thank you so much for joining us today.
Thanks, Danny. Thanks, Julia.
Okay, that was Kyle Orotto from Capital.com.
All right, let's have a look at the after close leaders and laggards, kicking it off with the market leaders on an up day. I mean, New Farm really, I think, is the top one there. Up 8.7%, Resolute Mining up by 8.7%. Not sure what we've got with a couple of those stocks.
We might check out the laggards.
Move along, have a look at the laggards.
Computer share, okay, trading update there at the AGM, off by 5.5%. QBE off by 4%. Ditto for Flight Centre AGM. I think IPH might have been the same. So all off by 4 or close to just over 3.5%.
And I can just quickly tell you the top two stocks were actually Centuria Capital Group up 11.5% and Charter Hall, which was up almost 10%.
Yeah.
Okay, having a look at the small cap end of town in terms of leaders and laggards as well. Atlantic Lithium, look at that, up 45.5%. You were talking about all those moves in lithium. Gallon up by 18%. Bougainville Copper up 16%. So some big moves in the small caps.
Absolutely, and let's check out the laggards in the small cap space and see what is going on there. Right, 3P Learning, off 20%. EBR Systems off 15%. Oh, one step. Oh, the bamboo underwear's not doing so well, down by 14%. And Arizona Lithium did not find the love that the other stocks did, and that is off by almost 12%.
Still not sure how I feel about bamboo underwear.
Well, I can tell you the gentlemen in my household all have step one and attest to it being a fabulous product.
Okay,
so
I'll
there
have
you
to try it. All right, what is happening overnight?
And we have a Target Q3 earnings report, and we also have quite important core PPI and retail sales, particularly retail sales for the US. And we've got Fed Governor Michael Barr is testifying, more Fed speakers. Over in the UK, we have the CPI, and in Europe, industrial production and a trade balance.
And then tomorrow we've got a raft of AGMs coming through. News Corp, A2 Milk, GrainCorp comes through with its full year results, Sonic Healthcare, REA Group holding AGMs. And I think if we flip the page, there's even more companies that have AGMs. So Mirvac Group, Seven Group, Mineral Resources, whoops, typo there, Charter Hall and Northern Star Resources. So big day of AGMs.
Yeah, and also we obviously have that labour employment data out tomorrow here in Australia. And we'll also be keeping a close watch on Target in the US as the retail hands down third-quarter numbers.
You know what else is tomorrow is Small Caps Big Ideas. So just in case you haven't already registered for that, you can do so. We have, of course, the registration's open for our next virtual investor event, Small Caps Big Ideas. It's back for 2023. It will be bigger, better and faster.
And if you weren't a subscriber in previous years, we bring together 10 of Australia's leading small cap fund managers to each present one high conviction idea. And this year we're throwing in a Fast and Furious, I like the sound of Fast and Furious, special edition of The Call featuring microcaps chosen by you.
And does that mean Nadine just talks really, really quickly? Register to watch live or on demand at ausbiz.co/smallcaps23. That is ausbiz.co/smallcaps23. And I was remiss, I should say, we need to keep you updated on the markets now that it has officially closed.
Yeah, there we go. The CBO 200 up by 1.28%, and I had the ASX 200 up almost 100 points, 99 points, 1.42%, 7,105.
That is a new 20-day
Shebang.
high for the ASX 200.
A new what?
20-day high.
Oh, well, that is exciting. Let's see if we can break out of all of those. Anyway, we had some great interviews today,
We
so
did.
you can all catch up with those interviews on our website. And Jules, I won't be here tomorrow, but you'll be here bright and early.
I'm going to text you so you don't miss us too much.
Exactly.
Keep you updated.
Exactly.
All right. Andrew and I will see you, and Nadine, of course, hosting the Small Caps Big Ideas event. We'll see you tomorrow.
Have a great night.